Imagine standing in the heart of San Francisco in the year 1849. The air is thick with excitement, and the streets are alive with the footsteps of fortune seekers. The gold rush has begun, and thousands of people from all over the world are flooding into California, dreaming of striking it rich. Some come prepared, armed with knowledge and tools, while others arrive with nothing but hope and determination. The opportunity is undeniable, but success is not guaranteed. Those who understand the landscape and take calculated risks are the ones who will walk away with unimaginable wealth. Now, fast forward to today. We are witnessing a new kind of gold rush, one that doesn't take place in dusty riverbeds but in the digital realm. Cryptocurrency is the modern gold, and just like in the 19th century, those who recognize its potential early and take decisive action will reap the rewards. For years, skeptics have dismissed Bitcoin and other cryptocurrencies as nothing more than a passing trend, a speculative bubble that would eventually burst. And yet, here we are. Bitcoin has surged past the $86,000 mark, defying every critic who once called it worthless. Ethereum, Solana, and other altcoins are following suit, proving that this is not a fleeting moment, it's a financial revolution. Think about it, if you had invested just $100 in Bitcoin back in 2010, today, that investment would be worth tens of millions of dollars. The early adopters who saw the writing on the wall are now reaping the benefits, just like those first miners who struck gold in California. But here's the key difference, the opportunity is far from over. Some people believe they've already missed the boat. They look at Bitcoin's price and think, if only I had invested 5 years ago. But that mindset is flawed. This isn't just about Bitcoin, it's about the entire cryptocurrency ecosystem, which is still in its infancy. With institutional adoption on the rise, new regulatory frameworks emerging, and technological advancements revolutionizing the financial industry, the best opportunities are still ahead. Consider what's happening right now. The US government is beginning to take crypto regulation seriously, laying the groundwork for a more secure and mainstream digital asset market. Major financial institutions, from BlackRock to Fidelity, are launching Bitcoin ETFs, making it easier than ever for everyday investors to get involved. The world's largest tech companies, from Apple to Microsoft, are exploring blockchain technology, signaling that crypto is becoming an integral part of the future. Yet, despite all these signs, most people remain on the sidelines. They hesitate, unsure if now is the right time to enter. They let fear and uncertainty hold them back, just as many did during the early days of the internet. Remember when people dismissed Amazon as just an online bookstore? When they laughed at the idea of streaming movies online instead of renting DVDs. Those who saw the potential in these innovations didn't just change their lives, they changed the world. This is where we are with cryptocurrency. The financial system is shifting, and we are at the cusp of a new era. Blockchain technology is revolutionizing industries beyond finance, healthcare, real estate, supply chain management, and even art. Every single day, new use cases emerge, proving that crypto is here to stay. So, the question isn't whether you should invest in crypto. The question is, will you take action before it's too late? Will you be one of the people who look back in 5 years and say, I wish I had invested, or will you be the one telling others how you made life-changing gains by seizing the opportunity at the right time? Because make no mistake, the time is now. To truly understand why this is the best time to invest in crypto, we need to step back and look at the bigger picture. What we are witnessing today is not just a simple price surge. It is a convergence of multiple forces, economic, technological, regulatory, and institutional, all pushing the crypto market forward in ways that were unimaginable just a few years ago. One of the most important factors driving this momentum is regulatory clarity. For years, governments and financial regulators have struggled to define how cryptocurrencies fit into the existing financial system. This uncertainty has created hesitation among institutional investors and everyday traders alike. But now, things are changing. The US Securities and Exchange Commission, SEC, has finally started taking serious steps toward integrating digital assets into mainstream finance. In recent months, we've seen an unprecedented push for crypto regulation, with discussions around classifying certain cryptocurrencies as commodities rather than securities. This distinction is crucial because it provides a clear legal framework for investors, making it safer and more predictable to enter the market. At the same time, institutional adoption is skyrocketing. Major financial firms, hedge funds, and publicly traded companies are pouring billions into crypto. BlackRock, the world's largest asset manager, has launched a Bitcoin ETF, allowing traditional investors to gain exposure to the crypto market without the complexities of directly holding digital assets. This level of institutional involvement is unprecedented and signals long-term confidence in the industry. But institutions aren't the only ones paying attention. Retail investors are coming back in droves. After the bear market of 2022 and 2023, many people lost faith in crypto, believing that its golden days were behind it. However, as Bitcoin continues to reach new all-time highs and altcoins show strong performance, the market is once again attracting mainstream interest. The fear of missing out, FOMO, is beginning to set in, and as history has shown, when retail investors return in full force, prices tend to skyrocket. Beyond market factors, technological advancements are driving innovation in ways we've never seen before. The Ethereum network's transition to proof of stake has dramatically improved its efficiency, reducing energy consumption while increasing transaction speed. Layer 2 solutions like Arbitrum and Optimism are making blockchain transactions faster and cheaper, removing barriers that once hindered widespread adoption. Meanwhile, new blockchains like Solana are proving that scalability is not just a dream, it's a reality. And let's not forget about the impact of macroeconomic factors. The world is in a state of financial uncertainty, with inflation remaining a significant concern in many major economies. Traditional assets like stocks and bonds are facing volatility, prompting investors to seek alternative stores of value. Cryptocurrency, often referred to as digital gold, is emerging as a hedge against inflation and a safe haven asset in uncertain times. Perhaps the most compelling reason why now is the best time to invest in crypto is historical precedent. Every major bull run in Bitcoin's history has followed a period of consolidation and accumulation. The 2017 boom was preceded by years of slow, steady growth. The same happened in 2021. And now, we are once again seeing the patterns align: low supply, increasing demand, growing adoption, and improving infrastructure. All of these elements are coming together to create a perfect storm for crypto's next major surge. We are at the inflection point, the critical moment when those who act decisively will be rewarded, while those who hesitate will be left behind. The cryptocurrency market is undergoing a seismic shift, shaped by a convergence of economic forces, regulatory decisions, and technological advancements. As investors around the world search for opportunities to capitalize on digital assets, key developments among major cryptocurrencies and their growing adoption in different sectors have set the stage for unprecedented change. At the heart of this transformation is Bitcoin, BTC, the undisputed leader of the crypto revolution. Bitcoin's resilience in the face of macroeconomic uncertainty has been nothing short of remarkable. Despite periods of volatility, its ability to reclaim and hold critical price levels signals growing confidence from institutional and retail investors alike. The recent surge past $85,000 has not only reinforced Bitcoin's status as digital gold but has also drawn comparisons to traditional safe haven assets such as physical gold, which itself has seen new record highs of over $3,050 per ounce. This parallel suggests a deepening recognition of Bitcoin as a hedge against inflation, particularly as governments worldwide grapple with monetary policy challenges. Ethereum, ETH, remains a pivotal force, particularly as its evolution from a proof-of-work to a proof-of-stake model continues to bear fruit. Ethereum's role extends beyond being a simple store of value. Its smart contract capabilities power decentralized finance, DeFi, non-fungible tokens, NFTs, and enterprise-level blockchain applications. The demand for ETH has grown substantially, particularly as Layer 2 scaling solutions like Optimism and Arbitrum reduce transaction costs and increase network efficiency. Ethereum's recent price rise to $3,000 has further solidified its market position, with analysts predicting further upside as institutional adoption gains momentum. Ripple, XRP, has experienced its own watershed moment in recent weeks. The news of the U.S. Securities and Exchange Commission, SEC, dropping its lawsuit against Ripple was met with immediate enthusiasm from the market, pushing XRP's price upward. For years, Ripple has fought legal battles to prove that XRP is not a security, and this victory marks a crucial turning point, not just for the company, but for the entire cryptocurrency industry. If regulators soften their stance on digital assets following this case, it could pave the way for greater mainstream adoption. Beyond legal victories, Ripple has also made strides in global finance. Japan has become a major hub for cryptocurrency integration, and XRP is now being accepted by Open House Group, one of Japan's leading real estate companies. This move allows property transactions to be completed using XRP, alongside other cryptocurrencies like Solana, SOL, and Dogecoin, DOGE. The fact that a traditional, high-value sector like real estate is embracing digital assets is a testament to their growing legitimacy. Such real-world applications underscore the shift from speculative trading to genuine, practical use cases. However, not all the news surrounding Ripple has been positive. Recently, speculation arose about a partnership between Ripple and Swift, the global financial messaging network. Many believe that XRP was set to become an integral part of Swift's payment infrastructure, leading to speculation about XRP's future price potential. Unfortunately, these rumors were later debunked, originating from a hacked social media account that falsely spread misinformation. This episode serves as a reminder of how volatile and susceptible to manipulation the cryptocurrency market can be. Even so, Ripple continues to expand its network of partnerships with banks and financial institutions worldwide, which will likely strengthen its standing in the global payment ecosystem. Solana, SOL, has also emerged as a serious contender in the crypto market. Once known primarily for its association with NFT projects and decentralized applications, Solana has been making significant inroads in enterprise-level blockchain solutions. Its integration into the Japanese real estate market through Open House Group is a significant milestone, demonstrating that Solana's high-speed blockchain can be used for large, real-world transactions. Investors who once viewed Solana as an Ethereum alternative are now recognizing it as an independent force with its own distinct advantages. Dogecoin, DOGE, once dismissed as a joke, has continued to surprise skeptics. The meme coin has gained serious traction as a transactional currency, thanks in part to endorsements from high-profile figures like Elon Musk. Dogecoin's acceptance in Japan's real estate sector is just the latest example of how its use case has evolved. While some still view Doge as highly speculative, its growing role in commerce cannot be ignored. Beyond individual cryptocurrencies, global developments have been shaping the industry in profound ways. Japan, for instance, has been positioning itself as one of the most crypto-friendly nations in the world. The ruling party recently proposed a reduction in cryptocurrency capital gains taxes to a flat 20%, a move designed to attract more investors and blockchain-based businesses to the country. This progressive approach contrasts sharply with the regulatory uncertainty seen in the United States, where agencies like the SEC continue to send mixed signals. Meanwhile, SWIFT, the backbone of international banking, has been taking serious steps toward integrating digital assets. The organization has begun trials for live digital asset transactions in partnership with global banks, signaling a potential transformation in how cross-border payments are conducted. Traditionally, international transactions have been slow, expensive, and heavily reliant on intermediaries. If Swift's experiments prove successful, it could open the floodgates for cryptocurrencies and central bank digital currencies, CBDCs, to become a standard part of global finance. Institutional involvement has also been ramping up. Major players in the financial world are no longer ignoring crypto, they are actively embracing it. Metaplanet, the largest corporate holder of Bitcoin in Japan, recently made headlines by appointing Eric Trump as a strategic advisor. While this move may have political implications, it also underscores how deeply entrenched Bitcoin has become in mainstream finance. At the same time, crypto custody firm Koma Inu has announced plans to expand into the US market, citing a more favorable regulatory environment under the current administration. Unlike traditional exchanges, custody firms play a critical role in ensuring that large-scale investors have secure ways to store their assets. The fact that Koma Inu was able to secure $75 million in Series B funding, entirely in Bitcoin, demonstrates just how much institutional confidence has grown. All of these developments point to a future in which cryptocurrencies are not only here to stay but are poised to become a fundamental part of the global financial system. However, investors must remain vigilant. While opportunities abound, risks still exist. The crypto market remains highly volatile, and external factors such as geopolitical tensions, inflation rates, and interest rate policies can have significant impacts on digital asset prices. Despite these challenges, one thing is clear: the crypto revolution is accelerating. Whether it's Bitcoin cementing its status as a hedge against inflation, Ethereum continuing to drive decentralized innovation, or Ripple reshaping global payments, the industry is maturing in ways that were unimaginable just a few years ago. For investors, businesses, and policymakers alike, the question is no longer if cryptocurrencies will reshape the world, but how fast. I hope you found this information helpful and insightful. If you did, please let me know in the comments below. I'd love to hear your thoughts. If you enjoyed this video, please give it a thumbs up, it really helps others find this content. And if you're new here, Don't forget to subscribe to the channel and hit that notification bell, so you never miss an update. Sharing this video with your friends, family, or anyone you think would benefit from it would mean the world to me. It's how we grow this community and spread valuable information together. Thank you so much for watching, and I'll see you in the next video.